You know, it doesn't, it's not sexy, but it's not going to lose value. And Bitcoin is your growth equity.
Yeah.
You know, it's going to outperform it massively, but at the price of higher volatility. So, you know, but yes, I mean, I'm a profit maximizing individual and I hold both. I always have held both. And, you know, I rebalance a little bit from time to time. I mean, when I think gold is cheap, I mean, I haven't really sold much Bitcoin, but if I thought gold were stunningly cheap relative to Bitcoin, I would sell some Bitcoin and buy gold. And in turn, what I see going on right now is gold's run pretty hard and some of my stocks have run really hard. And it's very easy for me to say, you know what, I'm going to sell a few of those stocks and buy some of this Bitcoin, which has not run hard, but is about to. That's all I'm really thinking. And I'm talking about adjusting at the margins,
Yeah.
not wholesale changing my investment strategy.
Yeah.
Hey guys, welcome to Everyday Finance. Following a steep decline from its most recent all-time high, Bitcoin has entered a stormy phase that reflects decreasing enthusiasm for institutional inflows and broader market worry. After a year of tremendous increases in volatility, the asset is now trading at a significant level after losing important support. This suggests a possible short-term momentum shift. Despite the decline, investor Lawrence Lepard is still quite optimistic. He points out that just a few weeks ago, Bitcoin was close to its top, and he sees this current price of $11,370 after it fell below $100,000 as a fantastic time to buy. Based on this conviction, he is selling his gold-related holdings in order to increase his Bitcoin holdings. Describing the transaction as clear-cut and simple, Lepard also makes a bold prognosis for the coming months, predicting that Bitcoin may explode in the next 1 to 6 months, rising from about $120,000 to $250,000, or perhaps over $400,000 in a quick catalyst-driven spike. Growing awareness of monetary debasement, in his opinion, would drive this possible breakout. He describes Bitcoin as ready to emerge aggressively like a lion stirred from slumber as more people turn to sound money alternatives due to economic stresses.
This is really interesting to me, and I tweeted about it. You're starting to see big names who are traditionalists talking about it. And JP Morgan said, you know, the reason the price of gold and Bitcoin are both strong, and Bitcoin still is strong, even though it's off its 126 high, is that what we've got going on is what they're calling the monetary debasement trade.
Yes.
They now have a name for something that you and I have believed in for 5 years. We've thought it was certain. We knew it was coming. We believed in it. They've now named it.
And it's bigger than Bitcoin,
and
right?
It's bigger than Bitcoin.
Yeah.
It's gold and Bitcoin. And, you know, I'm sure a lot of Bitcoiners and people listening to this are frustrated that Bitcoin's price hasn't moved. But first of all, let's consider that Bitcoin's done pretty well. I mean, you know, last summer it was at 60. You know, it's 106 now or whatever. It hit 126, whatever. It's still up quite a bit. You know, I mean, that's better than the stock market.
Yeah.
And there's a big history. And if I don't have a chart that I can refer to here, but maybe you'll pin it in the notes after the show, and I'll send it to you. There's a large history of gold smelling debasement first, because it's more widely held. Everyone knows it, knows what it is. And Bitcoin, a little bit more narrow, a little bit more risk on, a little bit more specialized group of people that hold Bitcoin. And it wakes up later, but then it goes harder. And so the classic example of this, that's really laid out nicely on this chart, which you'll pin, is that in 2018, 2019, when, you know, there was a repo blowout and there were a lot of kind of monetary events that kind of led people to know he's going to have to pivot and print. And they didn't know COVID was coming, but you could see it, and gold was marching up nicely. Bitcoin was flatline, right? And then COVID hit, and gold went up a lot on COVID. Bitcoin was still flatline for, you know, 3 to 6 months. There was kind of a lag. And then one day Bitcoin woke up. As the chart shows, gold and silver reacted first.
Yes.
And Bitcoin sat really dormant for a long period of time, and then it really woke up. And this reminds me very much, there's a great video of Christopher Walken talking about how, you know, the lion sits around and lets people kind of play in his sandbox for a while. And then at some point he just wakes up and gets pissed off and goes down and just kills all the hyenas. And that's what happened in 2020. You know, Bitcoin was kind of locked in at $10,000 into, you know, and gold was going up, and everyone's like, how come gold's moving? Bitcoin's not moving. What's, you know, this digital gold, it's not working. Remember that? I remember, and all my friends were like, what's going on? What's going on? I was like, just wait. And then suddenly Bitcoin went from 10 to 60.
Yeah.
In a very rapid period of time. It did a 6-packer. Okay. So it feels where we are today right now feels to me like the exact same thing.
Yeah.
Gold's moving, gold smells it. the print's coming, the debasement's coming, okay? Bitcoin, oh yeah, okay, a week or two ago we're at 126. We're not that far off the all-time high. We're at 106. I mean, I look at it today, and honestly, I'm selling gold-related things to buy Bitcoin-related things because it's such an easy and obvious trade.
Yeah.
Because in my opinion, what will happen is sometime in the next 1 to 6 months, and I can't say when, because nobody ever knows, but if Bitcoin's going to wake up and like that line, it's going to be pissed off. And it's going to go from 120 to 250 for starters, and maybe much higher, maybe 300-400. I mean, I think 400 is possible. I'm not saying it'll stay there forever, but I'm just saying it's gonna be pissed off. It's gonna really run hard. You can see that it's coming. Monetary debasement is entering the mainstream, and I think a lot of people, there's another point I would make that I think is an important one to understand. There are a lot of people calling me and say, "Gosh, gold's up so high now. We've got to sell it."
Yeah.
We've got to sell it. And
what's too high?
Well, that's that. Thank you. You're my straight person. Thank you for asking the question, because we talked about this earlier. What is too high? I mean, yes, it's a lot higher than it was, but measured against what? And that's the important thing to consider. If you consider all the fiat currency that's been created over the last 50 odd years since we went off the gold standard, it's enormous. I mean, to go to 100% coverage of the monetary supply of the United States with the gold that we currently hold, the 261.5 million ounces that we'd have to be at $90,000 an ounce. We're not, right. That's how much money, which isn't, it's not as much a statement about gold. It's just about how much fiat money we've created.
Canada sold all its gold. Could you imagine?
Right. So, and the point is, you don't need to have 100% coverage.
Yeah.
Okay. And that's not going to happen. Okay. I'm not suggesting, but you're still right now at a level at 4,000 where you're way below the mean coverage over the last couple hundred years in societies that had gold as a part of their monetary system. And so, to my way of seeing it, 4,000 gold could easily double and still kind of in the fairly valued range.
But yet you're going to sell some Bitcoin for gold.
No, it's the other way around.
Sorry. Yes, that one.
Yeah. Well, so look, investors, in my view, Bitcoin and gold are really two flavors of the same trade. One, they're both sound money. Gold is analog sound money. Bitcoin is digital sound money. They both are sovereign currencies that cannot be printed by government. That's why in a time when governments being as irresponsible as ours are being, these are the safe havens, okay? Gold is the ancient version of it, and some people shit on it, but they shouldn't, because it got us this far, and before 2008, it was all we had. And it has the advantage of being very widely distributed and having a fraction of the volatility of Bitcoin. A big down year in gold is 15%. We all know Bitcoin's had much larger corrections than that. So
we just had one in one day.
Right. So for those people who are kind of thinking, I don't like corrections, I'm willing to sacrifice the upside in order to protect my downside, gold fits. I mean, I have some very old clients who, they own a little Bitcoin, but they own a lot more gold. I get it. And there's a reason for that. So, if you're, in the way I've kind of, in the modern world, I kind of look at it a little bit as like gold is your bond. It's not sexy, but it's not going to lose value. And Bitcoin is your growth equity. Yeah. It's going to outperform it massively, but at the price of higher volatility. So, but yes, I mean, I'm a profit maximizing individual and I hold both. I always have held both. And, I rebalance a little bit from time to time. I mean, when I think gold is cheap, I mean, I haven't really sold much Bitcoin, but if I thought gold were stunningly cheap relative to Bitcoin, I would sell some Bitcoin and buy gold. And in turn, what I see going on right now is gold's run pretty hard, and some of my stocks have run really hard. And it's very easy for me to say, you know what, I'm going to sell a few of those stocks and buy some of this Bitcoin, which has not run hard, but is about to. That's all I'm really thinking. And I'm talking about adjusting at the margins, not wholesale changing my investment strategy.
Yeah.
Gold and associated. Stocks have surged 120% year to date, greatly outpacing the meager 14% advance in the overall market and even Nvidia's 38% gain. This recent market jolt has made investors realize they may be underexposed. According to mainstream institutions like JP Morgan, which view the move as part of the larger monetary debasement trade that benefits both gold and Bitcoin, this spike demonstrates a growing pursuit for performance amid constant money creation. Bitcoin has a history of trailing before exploding, as demonstrated in 2019 to 2020 when gold rose amid early repo market stressors, while Bitcoin hovered at $10,000 before soaring to $60,000, when compared to decades of fiat expansion. Since the gold standard collapsed in 1971, the current gold price of about $4,000 seems reasonable. Fully backing the U.S. money supply would imply a gold price of $90,000. And even $8,000 would simply return it to historical norms for a gold-backed system. The balance between conservative bond-like security and growth-oriented upside for investors seeking protection from government overreach is mirrored in this environment, where gold and Bitcoin serve as complementary safe haven assets. Gold offers stability as the traditional analog option, while Bitcoin offers higher potential returns as the digital alternative.
And you've got a quarterly report coming out.
I have a quarterly report.
Yeah.
So my partner David Foley and I, we manage a fund that invests in gold and Bitcoin. He also manages the Bitcoin Opportunity Fund, which focuses exclusively on Bitcoin. He does that with James Lavras. And basically the fund, the gold fund that we manage, we write a quarterly report, and it's free, and it's on our website, ema2.com.
I'll link it.
Yeah, you can Google me. And it basically is it's long, but it has a lot of charts, and everything I'm talking about here explains in greater depth our thought process to how and why.
Yeah.
We're still, this is the important part, Mags, we're still really, in my view, kind of in like the third inning of this monetary debasement trade, if this is a 9-inning baseball game. I mean, yeah, it would have been a lot better to buy gold or Bitcoin 2 years ago, no doubt. I mean, gold was, half its price today. Bitcoin, there were times, I mean, the real time to buy Bitcoin was after Sam Bankman-Fried was at 15. I mean, what an amazing sale that was, right?
Yeah.
But the point is, you're still, a lot of people, and I have a lot of friends, clients, others who come and say, gosh, I'm too, I get it. You're right. Everything you say is playing out, but it's too late. I feel like I'm paying too much.
Yeah.
And I kind of come at that from a different point of view. I'm like, well, no, these are your safe havens, and you can't pay too much for a safe haven. And it goes back to that. And this, we were talking earlier about gold, and is the price of gold too high relative to other things? This, in my view, what's going on is, there's a secular and fundamental shift in the landscape. And when that kind of thing happens, you can't just go back and assume you're going to kind of revert to the mean. And so I see fiat currency is in real trouble based on the confidence of governments, confidence of people in their governments to control the printing. And as a result of that, I think we can run very far in both these directions. Now, let me just give you the cautionary note on the other side of that. And I always say, because they come and invest in me and they ask my opinion, what could go wrong? Because I really hate seeing people lose money, and I hate giving people advice that causes them to lose money. What could go wrong is the government gets responsible. Now, I say that and people laugh, but stranger things have happened, right? So I'm watching like a hawk.
Okay.
I mean, if suddenly I saw, the government saying, we're going to cut the defense budget, and we're going to means test Social Security, and we're going to make the retirement age higher, we're going to trim all the Medicare. I mean, if the government actually really began to behave in a truly responsible manner, then okay, maybe this trade isn't as good as I think it is. Although even that, I think at this stage, we're probably too far gone. The debt is too big, and it's so overwhelming that if we do what I just described, we'd also have a big economic downturn. And that downturn would lead to bigger deficits, and those deficits would lead to more printing. So I kind of feel like we're in a damned if you do and damned if you don't condition with the government. And so that's why I wrote the book, to try and warn people about that.
Yeah.
And to try and suggest that you got to protect yourself. I mean, there's a way. I mean, this, people say, you're an old guy, and they accuse me of being a doomer because I'm forecasting some stuff that's not going to be pleasant for the United States, right? I mean, we're going to have very high inflation. We could have a punk economy. I mean, and when these things happen, people get hurt. I mean, in 2008, people got hurt.
Yeah.
And we could have something similar to 2008 or similar to the COVID experience. And, but to me, it's just analysis. I'm just looking at the facts and saying, look, guys, the math is the math. This is what's likely to happen. So and that was the first part of the book, how we got here, why it's broken, how I analyze the situation. Second part of the book is, okay, that's bad news. Here's the really good news. There's a way you can solve this, right? Don't sit there like a bump on a log. I mean, get up and do something to protect yourself.
Yeah.
Because I sincerely believe that in 5 years, the people who do the right things are going to be in a much better position than those people who were asleep and aren't paying attention to it. So,
Lawrence. Lepard cautioned that London's physical silver stockpiles only cover roughly 7% of unpaid claims, resulting in a situation where a hasty delivery would swiftly reveal the deficiency. Drawing comparisons to gold, he pointed out that although the LBMA records about 10 paper claims per ounce, the actual figure may be closer to 100 when worldwide off-book positions are taken into account. Similar to Satoshi's criticism of centralized trust, Lepard contended that central banks frequently use offshore funds and the BIS to coordinate the market using unbacked paper contracts during price spikes. They are indifferent to losses because they can easily print more fiat. He claimed that this ongoing repression has muffled what should have been a blatant inflation signal by keeping gold well below the $90,000 per ounce threshold required to properly support the U.S. money supply. He then turned to Bitcoin, explaining how futures markets similarly produce paper coins, where sellers promise deliveries they might not be able to fulfill, diverting real demand and occasionally dampening spot prices. Despite this, he sees the scales such as Binance perpetuals hitting $16 billion open interest amid $20 to $30 billion daily. Spot volume is insignificant in comparison to gold's decades-long paper overload, even if governments push the boundaries. He thinks Bitcoin's decentralized nature would eventually withstand complete repression. Lepard emphasized silver's image as the rebellious metal that lost most of its historical monetary significance. As big nations like China and India moved away from substantial use, the gold-to-silver ratio exploded from its typical 15 to 1 to 100 to 1, before settling to about 80 to 1. With all of this in mind, the question now is whether Bitcoin wanders toward the $94,000 zone if the RSI stays stuck below 30 or bounces back off the $100,000 support, as it has in previous corrections.